In this presentation, we will discuss the pros and cons of an engagement letter, a more formal contract between the bookkeeper and the client. This is useful information whether we are a bookkeeper or whether we are looking for services for financial services, tax preparation, bookkeeping services, because this will allow us to format and think about how we want to define what we are looking for from that contract, from that engagement. For more accounting information and accounting courses, visit our website at accountinginstruction.info. So an engagement letter has the goals of define what we are responsible for. So if we're the bookkeeper, what is it that we are responsible for? And implicitly, that's going to define what we are not responsible for. We're also going to say explicitly some of the things that we are not responsible for. And this is really important because a lot of times the client doesn't really have an idea of what we are doing and what we're not doing. An informal contract, if we just say, hey, we're doing the bookkeeping and we get paid for the bookkeeping, there's still a contract there. We still have a contractual agreement and all the elements of a normal contract are present. However, that contract is not very defined. We don't know exactly what the rules are of that contract. We haven't formally put it down in writing. The more defined the contract is, the easier it will be able to do, especially if we're trying to differentiate the things that we do as a bookkeeper and trying to work with other individuals, such as a tax preparation or such as payroll, and define what it is that we do and what we would like to outsource and work with other professionals to do in that capacity. So that's really helpful to make those definitions, and we want to do that formally with a letter if possible. So an engagement letter, in other words, not required, because we can have a formal contract or we can have an informal contract, a verbal contract, an agreement through just a handshake and an agreement and the performance of work. However, a formal contract such as an engagement letter, in order to list out what we do and what the others are responsible for, very useful. That being the other format, the other necessary or the other component of an engagement letter, it's going to say what the client is responsible for. So it's going to say what we do, and it's going to say what the client does, and be as specific as possible in those terms. It's also going to reduce liability for us, or that's the hope, in that we're going to define, by defining what we are responsible for, we're limiting the responsibility about those things that we're not responsible for. So there shouldn't be any confusion about the things that we're not covering under this engagement, and therefore we should have less liability about problems related to those particular things. It's also going to reduce job creep, which is basically a concept that once you start working, it's often the case where the components of the job or the things that the client wants done seems to increase over time. And oftentimes that happens and we don't really understand, we don't really pick it up in the billing. We're not being very specific on what we do and what we do not do. And therefore, as the increased desires of the client increase, we're not picking it up in the billing, and we can also mess up basically our system. Basically, go into systems that are outside the design of what we do, and so we want to be very specific on what we do because that's how we specialize. And if we start to have job creep and we start to differentiate in the things that we do, we may find ourselves doing work that is less efficient and not basically being as efficient, being able to help as many people and be able to be as profitable. It's also just a goal to keep everyone happy through understanding. And you would think that an engagement letter, because it's a formal thing, that would reduce or could make a relationship more difficult. But in a business relationship, it typically, in many kind of relationships, it will make it easier because it's going to define the terms, what we're looking for, what the other person wants. So it makes more transparency in the negotiation, which within business is going to be really useful. We want transparency. We want to know what each party thinks about the engagement or thinks they want from the engagement, and be very clear about those things. And then we can actually measure whether or not either party is providing those things. So although we're doing the bookkeeping service, of course, there are responsibilities on both sides in order for the engagement to work. And the more transparent we can make those things, the better. And this was supposed to indicate that there's a meeting of the minds, which is often the terminology that is used within contracts. A meeting of the minds of mutual agreement and understanding between two individuals. And that's often what basically a contract is going to be defined as. And the more transparent that is, the better the meeting of the minds is. So they're not like headbutting here. That's a meeting of the minds. So here's an engagement letter. Now, I don't typically add a lot of detail in terms of just writing for a PowerPoint slide. I've given an example of the engagement letter so you can take a look at it, but I think it's useful to go through some of the terms and note this is just an example of an engagement letter. You can make the engagement letter in any format you want and refine it down, but just look at some examples of just a stock engagement letter for a bookkeeping type of business. So this letter is to confirm and specify the terms of our engagement with you and to clarify the nature and extent of services we will provide. We will perform the following services for you each, whatever it's going to be, month, quarter, whatnot. From the list below, we're going to choose the list items down here. Typically, our system, I'm just listed out what I would recommend that we're talking about here. These services will begin whenever they're going to begin. So, and we might want to update this engagement letter from time to time as well. Notice that agreements will change over time. We have an agreement with people. It's okay for those things to change, but as things change, if we start to see job creep happening, if we're happy with more work, then that's good, but we should then recap our engagement letter, make sure that they're defined from time to time. So we're going to record cash receipts, income from your bank statements. We're going to record cash disbursements, expenses from, it should be your bank statement. We're going to reconcile bank accounts, and we're going to provide financial reports, including profit and loss report and balance sheet on a cash basis. Note that these reports are not reviewed or audited financial statements, and we're going to provide a backup file of your financial data if and when requested. So those are just going to be the simplified bookkeeping terms. Again, we could reword that and make it a little bit nicer in terms of the wording. But we do want to make it kind of lawyerly type of wording and define, for example, that the financial statements are not issuing an opinion, and be clear about something like that, and define what we're doing on this. Next paragraph. Our engagement is limited to the period and accounting services indicated above. So notice we had the starting period. If we have a set ending period, we're going to want to put the set ending period. If it's going to be a continuing engagement, then we might want to mention that it's going to be continuing until such point that either party can terminate the engagement for whatever reason that they want, basically. We will not audit or review your financial statements, so that's important. We're not doing an opinion, is what that means. As those terms are defined and generally accepted at auditing standards or any other accounting documents and information you provide, we will not verify the data you submit for accuracy or completeness. So, and this seems like we're trying to kind of get out of what we're trying to do here, but we need to be specific on that. Our goal is we're not trying to audit or give an opinion. We have to be specific on that because those are specific terms within financial statements. And so we want to make sure that we're not giving some indication that because we've entered the data that it's assured. So, and a lot of times customers will actually ask us for things like that. If they might ask us, for example, if we're making deductions that they think are business or personal, and start to ask us and start to tell us, well, and argue why it would be a personal or why it should be a business expense, because that would lower their income taxes. And we have to note that, hey, we're not doing the tax preparation. We're entering the data that you provide for us. We're going to ask or think that you should go to the tax professional for that. If you tell us that something that is deductible or is part of a business expense as opposed to a personal, we're pretty much going to go by the information that you have here, and we're going to recommend. And that doesn't mean that you should feel comfortable with the IRS necessarily. It may be good, it may be not. If you want that kind of opinion, then you got to go to the tax preparer to give you that kind of assurance, because they're the one that's going to have to argue the case if there's any issue there. So we want to be clear on those types of things. Rather, we will rely on the accuracy and completeness of the documents and information you provide to us. You are responsible for designing and implementing controls. So note that we're saying what the other party is responsible for as well here. So it's not just our terms that we're looking at. This isn't just what we're going to do. This is a mutual agreement between the two of us. Controls to prevent and detect fraud, and informing us about all known or suspected fraud impacting the company. So basically, we're saying, hey, you're responsible for internal controls, basically to detect fraud. Our services here in entering data isn't designed to detect financial statement fraud. We're entering data. In addition, you are responsible for identifying and ensuring that the entity complies with applicable laws and regulations. So again, we're basically saying that's your responsibility to comply with laws, not our responsibility as the bookkeeper to make sure that the company is doing so. So we're not taking on that responsibility. That's the responsibility, of course, of the business. In order for us to complete this engagement in a timely and efficient manner, we request access to documents concerning your financial transactions, including but not limited to bank statements, canceled checks, credit card statements, and any other financial information necessary that impacts our accounting records. Now this seems obvious, but clearly we need to indicate this. If we haven't completed the job, of course, then the question is, why haven't we? Have we done our end of the job? Or have we not been able to, based on the fact that we don't have all the information, such as the financial information? So we want to be clear on what is needed for us to finish up the job. Our fee for these services will be based upon the amount of time requested at our standard billing rate plus out-of-pocket expenses. Now this fee may differ. I'm not going to get into fees here on what type of fees you could have. We might have a fixed fee. We might have a fee just that's based on the number of transactions, which for small companies is pretty good. We could say, hey, how many transactions do you have? For a company that has that many transactions, that's a complete bookkeeping-based company, this is what we charge. And then if they go up to the next level of number of transactions, we can up our fee. So we may not have just a fee, in other words, based on just time spent. That's just kind of the default if we don't have any other kind of format. You may want to think of a format of saying, hey, if you only have this many transactions, one bank account, and we're not doing payroll or anything else, then this is the fee. If your transactions go above this level, this is the fee. If you want to tack on payroll, if you want to take on payroll or some other type of information, charge a flat fee, because that kind of thing will be easier to, in some cases, to discuss. But we won't get into the fees here. Just note whatever your fee terms are. We can put that in the engagement letter. All invoices are due and payable upon presentation. Our maximum liability to you arises for any reasons related to services rendered under this letter shall be limited to the amount of fees you paid for these services. So again, this is our attempt to limit our liability. We're going to say, hey, our maximum liability is what we charged you here. We're agreeing to that. We don't want to get sued for, and that may not stop a lawsuit above that. In some cases, it doesn't mean it'll completely stop a lawsuit, but that's the agreement we're coming to here. That's the agreement we want to be at, and that is that we're limiting liability to our fees, what we've collected from you. In the event of a claim of third-party related or services under this letter, you will indemnify us from all such claims, liabilities, costs, and expenses except to the extent determined to have resulted from our intentional or deliberate misconduct. So again, we're attempting to limit our liability exposure here to at least our fees. If any dispute arises among the parties hereto, the parties agree first to try in good faith to settle the dispute through non-binding mediation. Now this is an attempt, and we could include this or we may not, but we noticed that our goals, if there is a dispute, is to basically sue somebody, which is to go through the normal court process, or to have some other type of mediation. A normal lawsuit is usually really expensive for all involved because you have to hire lawyers and go through the entire process. Mediation or some other type of process is usually less costly. So we're trying to say here, this is basically saying, hey, if there is a problem, let's try to work it out. Let's try to talk about it. We can get a mediator, which will be someone that can mediate, which will help us to have a third party to talk to each other. Let's not just go into our separate corners, get a lawyer, and not talk to each other, all right, and not try to work it out. So this is an attempt to try to discuss what type of dispute resolution we will have if there is an event in the future of a problem. The cost of mediation shall be shared equally by the parties. And again, mediation does mean that we're gonna look for somebody, but it's not a formal process to go to court. It's going to be mediated, which usually requires some other person that's going to be assigned as kind of a go-between, a negotiator between the disputed parties. So the parties agree if any dispute cannot be settled through mediation, the dispute may then be brought before a court of competent jurisdiction, but the matter will ultimately be decided by the court, sitting without a jury. So again, we're trying to avoid the costliness of the jury. So the parties recognize they have knowingly and voluntarily agreed to waive all rights to have any such dispute determined by a jury, but otherwise retain all rights afforded under the applicable civil justice system. So again, you may not have all this kind of stuff, but it's trying to limit the type of cost, legal cost that we have. It doesn't mean you can't go through legal problems. It's just, how are you going to go through the legal dispute? Do we want to avoid the most costly way, which is to go through the normal jury kind of process, and the least costly way would have to have mediation. And if mediation doesn't work because it's not totally binding, then we're looking for some other format that we can settle our differences through the legal system without a full-fledged jury trial. For more accounting information and accounting courses, visit our website at accountinginstruction.info.